Hello traders, hello everyone, welcome in the advanced room here at Live Education with XM. We're gonna talk about Forex trading during this session, and we're gonna look at the market at practical examples or just find some trades to discuss. We can also discuss a little bit of historical trades because today is a specific day. We got non-farm payrolls. Market can behave in a not I don't want to say unpredictable manner. Of course, it's always uncertain to some extent, but in a way that it might be waiting for the news or a repositioning towards the news, and then later we're gonna have explosion potentially after the news, explosion of trading, much more order flow coming in, and so like right now maybe corrections, maybe fades, and then we're gonna see what the news is gonna bring, right? So it's difficult, especially technically, to trade when we know they're gonna be macroeconomic driver taking over in 2 hours, right? So 2.5 hours. And the disproportionate volatility now and on the approach to the event and after event is also making it more difficult to make any sensible trading decisions right now. So we're gonna see we're gonna see what we're gonna have. So by the way, there is a chat section. Feel free to join the chat. Seeing Danushka was here. But yeah, feel free to let me know your comments, questions. Maybe you want to see any particular instrument, you want to discuss any particular trade idea. We can of course discuss it as well. So yeah, market is preparing for the macro event. And we're gonna see, maybe we can find something that's not involving dollar. This is also possible, right? So reactions on crosses will be not so much depending on the dollar. Dollar is still gonna bring volatility, but dollar is still gonna bring volatility, but those crosses gonna be moving based on their own proportions, right? Or how to say, fundamentals. That or market sentiment, actually, like fundamentals impact market sentiment, but in short term definitely not so much. But you know, there are different proportions in which capital is flowing to each cross currency, right? So now this is basically slightly detached from today's driver. But if there is like macro driver technicals align for it, right? So we're seeing even Aussie Kiwi kind of stalled this week, today, like yesterday also. So we would be looking for breakouts also on Aussie Kiwi, for example, right? All right, let's see what's there for us in trading. What do we see? Or in general on the market, everything pretty much decorrelated. Everything like the sentiment is fragmented. Everyone trading their every asset is trading based on whatever it's affected by. Interesting, copper is corrective. If we look at USD CAD, we can see that the news, first of all, we are corrective on USD CAD, right? You can see this bearish situation here. That got tested into lower high, right? And broken structure after test. So it's more representative. I should put it I'm sorry. I should put it here like that, right? So we were breaking that bottom, retest of supply, and we broke that one, right? Or we are breaking that one, right? So this is typical correction from lower high, ABC. Right now, very important that here we are having strong liquidity area, very important liquidity area. This one also very important because if you look at it, it was a pullback and continuation. So, for example, for example, yeah, we're having it like here. By the way, greetings to YouTube. Good morning, Aleniko. Thank you very much for joining. Guys, we are on YouTube for first 15 minutes, so like 10 more. And after that, we're gonna be at XM Live Education. You can find the link in the description. So feel free to join us there for full live education experience. It's enough to register with your email. You're gonna get demo account there. It's enough to have demo account, and you can use live education. You can join us. Use all the chat section, of course, and have conversations with us. So it's definitely worth it. So, but before we finish the YouTube part, we still have some time to go. So basically, we're correcting on USD CAD, and USD CAD is having double wham today. Two news from both sides, right? Canada is also releasing employment change and unemployment rates, so labor market data. So there is a possibility that those outcomes will go to different ways. Market is slightly positive towards non-farm payrolls, but there is a chance they're going to be a surprise, even like very positive surprise maybe. And it's not a high chance, right? That's why we are reactive to the news, right? Basically, if you don't have a strategy that's purely for the news, then you go in this reactive manner. And here is why. Because if if you think about it, right? Market is seeing all the data that's going into the release. Market is seeing all the data from last month because today's non-farm payrolls release and the whole labor situation report. We call it non-farm payrolls, but there is a big report, right? That's important to keep in mind. And non-farm payrolls is just a small piece of this report. But because short-term volatility is most correlated with NFP number, everybody is calling it NFP, okay, in trading business. But it's whole labor situation report, and market is assessing all the indicators that are representative for last month, because this is when the data was being collected, first half of May, or first 3 weeks of May, more or less. And now it's going to be published. So market is moderately positive about the possible outcome. And if you think about like medium-term trading or short-term, but not like intraday, not intra-week, but several weeks in classical meaning is still short-term on the market. Okay, several months is mid-term, and several years is long-term. Okay, that's a very simplistic way of putting it. So they expect slightly positive number. But if you think about all the traders that are not intra-week traders and not intraday traders, they gonna carry their positions through that event. So depending on expectations of that event, they decide to maybe lower their positioning, right? Maybe volatility going to be higher, maybe they expect trend change and so on and so forth in job market situation. Then they're gonna adjust positions as they see fit, and therefore market pricing gonna approach some sort of equilibrium where everyone is fine waiting for that number and then carry the position through. Of course, if the number, depending on what the number comes, everyone will react. Those who have positions will be reacting as well, either increasing them, maybe rebuying. If they reduce, they're going to be rebuying, and or closing them, or hedging, or reversing. Okay, so they're going to be reaction. The whole market will be reacting to that situation. But there is a chance, and of course, speculators, leverage speculators, going to be joining that possible reaction. There is some small chance the outcome going to be much better than expected. So the market has been positioning towards okay number, okay read, maybe somewhat positive, but it may be surprisingly positive still. But you can also imagine that there is some chance that it's going to be either slightly negative or very negative, right? So if market is positioned towards something positive, some negativity might have significant impact. This is where profit potential lies. So you don't have profit potential in outcome as expected or close to as expected. You have profit outcome on the profit potential on outcomes that are farther away from expected. So if that's 1% chance, I'm making that up, but that number up, but let's say very extreme outcome is very unlikely. Let's say somewhat extreme outcome is much more likely, maybe even 10% chance, okay, whatever. Let's also say that extremely positive outcome is somewhat unlikely, okay, and everything else is in the middle, right? So this is like 84% remaining. That's something, you know, close to positive, to slightly positive, something close to expectations gonna happen, right? And there is no profit potential because market will not be reacting too much to that. What market may do, they may say, okay, the way is cleared, so now we trade whatever we wanted, right? So in that case, you're still going to see order flow, you're still going to see market moving, you're still going to see some candles forming, but not because of non-farm payrolls number or the labor situation report, but because traders just wanted to trade that, and they just went for what they planned, right? So it's not that if we get outcome as expected, trading activity ceases because everybody is happy with what they have, is that there is no immediate driver for them to reposition, okay? And so whatever they wanted to do, they will do now as this central outcome clears the way for them. That's how this thing works typically. We're having another, I'm expecting bullish on DXY and bearish on other pairs. All right, so we're having two possibilities. One is, of course, very good labor market situation. And what we might be having as well is some escalation about Iran, because this is also something that makes, in recent months, dollar stronger and everything else weaker. When I'm looking at price action, right, weekly price action, I would treat as like higher time frame bias, let's say bigger picture bias, okay? So I wouldn't trade those signals directly, but I would treat them as maybe idea for what direction might make sense. And I kind of agree with sorry, the nickname was Aleniko1234. So thank you for comment, by the way, very nice, very much appreciated that you shared. So I kind of agree, because this setup, right, we're having very strong momentum candle that's breaking the previous candle and the one before. It's actually 4 weekly highs broken and closed by this momentum weekly candle, right? And what happened later, clearly some supply tried to enter, right? Because the price got much higher in short period of time. Some supply appeared, even if it's profit taking from longs, but they struggle to drop, right? So you have 1, 2 pullback candles. They are relatively small and not really decisive, right? And what we're having now is this one that's trying to continue higher, right? This one is trying to continue higher. It tested previous highs and pulled back. Okay, so if we look lower time frame, what we are seeing is that double high from those 2 pullback candles, right, after the move up, and we're having demand pullback. And now I would love to see